what you're seeing now in a lot of areas, not just lithium, is a statement of intent that they're going to break the stranglehold of, China and other overseas powers in this, and strengthen their own supply chains and make sure that they have the ability to produce what they need domestically. And with all the talk about trade wars and obviously America trying to strengthen its domestic trade, this fits completely into that. They don't want to be dependent on anyone for anything.
Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products or services. Always do your due diligence and consult with your financial advisor. And my guest today is Simon Clarke, CEO of American Critical Minerals, an exploration and development company with assets in Green River Potash and Lithium project in the Paradox Basin of Utah. Simon, welcome back. It is always great to have you.
You too, Lucian. Great to see you again. Thanks for having me.
Thank you for coming, Simon. Let's start with the lithium market. How do you assess the impact of recent U.S. government investments in lithium projects, like the 5% equity stake in the Lithium America Corp, on the broader development of a domestic lithium supply chain? What's your take on this big news, I would call it?
Listen, I think it's huge news. I think I think the sell-off in lithium was overdone, but I think there was this thought out there in some quarters that the U.S. did not really support the whole electric vehicle move or storage move that was happening globally. With this administration coming in, I think people thought maybe it would be difficult for this, but I think all that's ever happened is they've said, well, listen, if electric vehicles are competitive, then that's fine. But, we're not going to necessarily give them incentives over anything else. So I don't think they've been supportive or not supportive. They're letting the market forces dictate. But I do think what you're seeing now in a lot of areas, not just lithium, is a statement of intent that they're going to break the stranglehold of, China and other overseas powers in this, and strengthen their own supply chains and make sure that they have the ability to produce what they need domestically. And with all the talk about trade wars and obviously America trying to strengthen its domestic trade, this fits completely into that. They don't want to be dependent on anyone for anything, as far as I can see. And they know lithium is critical. They know most of the refined products come out of China, and they have to produce more. I mean, their production is way less than 1%, of the raw materials. So Thacker Pass, they've already put, $2 billion plus, or committed to put $2 billion plus of debt to build it. But this is another level where you actually take equity risk in a project. So I think it's a huge statement of intent, which they then followed up with Trilogy on copper and cobalt and, some other rare earths in the mix there as well. And then I would be surprised if we didn't see them do it in other projects as well. So I think the critical minerals backdrop is just incredibly compelling for the US right now.
Agreed. Simon, on a global scale, what drivers do you see the demand recovery over the next, let's say, 12 to 18 months for lithium?
Yeah, I think there was no doubt that there has been a bit of a glut in supply. I think, there was too much, when prices were 80,000 a ton, there was too much coming on too quickly. And while I believe that the demand side has continued to grow and grow quickly, is probably not quite as quick as people thought. So, a couple of years ago, when you had all of those demand supply analyses saying that, we're going to be in a deficit and it's just going to get bigger. I mean, obviously the supply came on quickly in certain areas and a lot happened. clearly, with prices where they went to, very few, if any, projects could make money at that. And so, I think they went from 80,000 to $6,000 a ton. And so, I mean, mines were being shut in, people couldn't explore, people couldn't develop. And I think you're starting to see it swing back the other way because demand has continued to rise. So I've seen analysis that we still are balanced right now, but as we move into next year and beyond, that may start to shift. Some people are calling for later in the decade. I think the fact that the price has moved back to 10,000, and looks like it'll go above that, is a really good sign. Obviously, it brings more projects. The if you like, the tier one projects can make money at that, but you still can't build a new mine or a new project at that kind of level. It needs, to my mind, get to $25 a ton, and then I think you have a really good mix where the cost of the batteries can continue to come down to make the cars competitive. And you're seeing that in China. I mean, some of the costs for their vehicles, which are excellent, they're very affordable. So I think that theme will continue, but at that price, people can make a good return, and you've got the returns you need to build these mines. As you know, mining's not cheap, and building mines is not cheap. So I think it's a really good sign. I think we're off the bottom. I think the U.S. government's going to continue to do a bunch of stuff domestically, which will help those in the U.S. But I think globally, we'll continue to see this recovery back up to a place where, as I say, new supply can come on.
Yeah, you have a lot of experience, and when you say you think it's a bottom, I'm all ears.
Yep.
Simon, given the increased focus on sustainable mining practices, what new extraction or processing technologies have emerged, let's say, in the last year or in this year, that could reshape cost structures or environmental impacts?
Well, I think that's a great question. And especially on the lithium side, I mean, it's not like there's any sort of anything new specifically. I think what you're seeing is the whole direct lithium extraction move gather pace. I think you're starting to see a lot of these pilots start to show that it works and can be taken to commercial stage. And, that's what we've seen right next to us in the paradox. I mean, our project, as you know, started life as a potash project, 20 minutes from the only current producer of potash in the US in Intrepid Potash. Great location. And, whilst the company was trying to get its BLM permits, which for potash is a long process, it took 8 years. The lithium side of things in the paradox really has been pushed forward predominantly by Anson, who has the land contiguous with us to the north and neighboring us to the south. So we're sandwiched between their projects. And their southern project, they've taken successfully to DFS. And their northern project, they've had huge success recently. They did a extremely positive pilot with Coke, which demonstrated the ability to take paradox brines to battery grade lithium carbonate. And on the back of that, we've seen POSCO announce an MOU for a big development stage plant, and LG Chem coming in, one of the biggest battery players in the world, and signing a definitive offtake. So, I think that's what's becoming real, Lucian. It's been talked about for years. You've obviously seen the Chilean government talk about the fact that they need these brine projects there to be DLE. And really, the other benefit of DLE, as you point out, is the environmental benefit. You pump the brines up. Yes, they can be deep, but you pump it up to the surface. You concentrate it. I mean, you put it through a membrane or a resin, take out the lithium, and then you pump the rest back into the formation. So the huge concern in Chile and Argentina and a lot of these high deserts where you have the salars there is water consumption. And so DLE is way less, I think I've seen a stat there that it's 80 to 90% better than the typical way of doing brine, evaporation ponds and everything else. So DLE, I think, in lithium is a game changer. The other thing that you'll see, for example, if you look at the Anson DFS, they're looking at $3,750 a ton op costs, which is a little over half what the Claystones at Thacker Pass have. They're around $7,000 a ton. And, as these projects get built, they always cost more. So the brines with DLE in a lot of ways will be a lot simpler, less capital, more environmentally friendly. And the op costs, if it works as it looks like it will, and it's not just coke in the paradox. There's a lot of places. Sunresin in China is doing a bunch, and of course you have the other big energy companies globally all pushing DLE, and I think we're finally seeing in the Smackover Standard Lithium making some big strides there. So, each basin and each brine is different, so they're not all going to work. For example, in the US, the Salton Sea is a big brine area, but the contaminants in that is very difficult. The nice thing about the paradox is the grades are little bit less than the Smackover, but it's very benign from contaminants. So when you're processing and you have to remove certain things, I'm never going to say it's straightforward, but it's very doable, and that's why coke got this to battery grade, relatively easily. And so that I think the paradox has shown itself to be a real player in the brine side. I mean, obviously, I would say Smackover's further ahead, but this is coming. So in lithium, I think DLE is a big game changer as we move forward, and I think it will help the cost equation as well.
Yeah, that's a great overview, Simon. Let's talk a bit about potash market. With global potash demand projected to grow up to almost 5% CAGR through 2034, I believe. What key factors do you believe will influence pricing stability and market growth in the coming year?
Yes, I think with potash, it's interesting. You look at it, there's been 3 or 4 main producers around the world. So, obviously Canada, Belarus, Russia, China, and they've dominated. But it's difficult, when you look at where a lot of the farming growth is happening in the world. Yes, the US is growing at 5% annually. I mean, and food security is big. The US imports 95% of its potash. Intrepid is the only producer domestically, and they produce about 300,000 tons a year into a market that's pretty close to 10 million tons. So you can see the equation there, and why potash is now a critical mineral. But I think globally, China's consumption has gone up a lot. They can't source it all domestically. They've invested into places like Laos. There's some mines for potash in Laos that have come on, but they've had problems with those, and so they need to source more potash. Obviously, South America, Brazil is growing exponentially when it comes to agriculture. And the thing about traditional farming, if you farm in Saskatchewan or the main farming belts of Russia or wherever, the traditional soils have good nutrients to start out, and it's only as you farm repeatedly for decades that you take the nutrients out, and that's when you really need potash to come back and provide those nutrients, but also guard against disease for crops. Potash is really crucial for that. But in Brazil, because they're hacking this land out of the rainforest, the farmland they create is devoid of nutrients from day one. So they need potash up front, and they need a lot of it. Right now, a lot comes from Canada, but you get a strike in Vancouver. There's conflicts. There's talks about closing the Panama Canal, and even if everything works smoothly, you're adding $200 a ton to the price of potash just on transportation. So I think you need to see more sources globally coming on. And then you layer on the whole food security and supply chain security in the US, and not wanting to be beholden to anyone. And that's, again, why it's got on the critical minerals list. And there's not that many good projects, with the Paradox Basin is probably the largest basin in terms of potential potash production in the US. So I think where we are situated is fantastic. Obviously, John Gregg, who was the geo who put it all together 12 years ago, knew that and located it, not only near Intrepid, which the first mine to do solution mining in potash, which is very similar to in situ in uranium. You pump brines into the formation, pump it up, and then concentrate the potash. So efficient, simple, but you can't do that in all formations. Here you can. So it's got size, scale, and ability to solution mine. And I think we're one of the few big projects really that can come on and make a meaningful difference. So I think we're really well placed on the potash side, and obviously now the lithium, which we haven't paid a penny for, but it's been really advanced around us. So I think it was great to bring out exploration targets on lithium as well. That just shows the scale. We now have permits in hand, and the next step for us is definitely to get drilling.
That's great. Simon, let's touch on the recent company developments, especially the recent news release. You announced large-scale exploration targets for lithium and bromine for the Green River project. Your press releases highlights that lithium, bromine, and potash targets for the project. How does combining these minerals strengthen its value for U.S. critical mineral needs? And how do you plan to leverage nearby infrastructure like rail hubs and all others?
Yeah, no, it's a great question. So, like I said, this was a potash project and a really good project in its own right. But obviously, when you've got the land right next to you, doing such a good job on the lithium side and showcasing the lithium potential, we Dean, our COO, a couple of years ago, really recognized that lithium was coming at the Paradox. And so, he made sure that we not only have our potash licenses in place, but we have placer claims across our land to cover lithium, and bromine is the main byproduct and a very big byproduct. So we made sure we've locked it up. And in each hole we drill, if you remember, the way this works is the potash is at 4,000 or 5,000 feet, and then you go down to the brines 2,000 to 3,000 feet below that. So in each hole we drill, we can test for the potash and then the brines in one hole. So it's really interesting. It gives us a lot of optionality. I think as we move forward, there's strategic deals that you might do on the lithium or the bromine side and advance the potash, or vice versa. I mean, I've always said, it's not, you don't have to be a rocket science to conclude that as the mine at Moab it gets older and they need more potash for those facilities, we are probably the closest as the crow flies, and we're flat lying, and the potential to supply that is obviously a huge step. So, for me, I think it would be obvious that that would happen. But I think now the lithium side gives another dimension. And you mentioned infrastructure with the Moab mine. You have a rail spur that's come in close by. We're right off a main highway. We're in the heart of Utah. Mining's a big industry in Utah. Utah was the #1 jurisdiction globally, according to Fraser Institute 2 years ago, for mining investment. And they're highly supportive of mining. So there's lots of, skill sets in state, lots of, road, rail, electricity, power, everything we need. The Colorado River is nearby. And so, I think we're really well situated and well placed. And these are highly strategic assets, in my view, that will become more and more attractive as we get drilling. So, and Lucian, we're pretty close to the agricultural heartland and the industrial heartland of the U.S.
Yeah, definitely. Simon, all good points. Drawing from historical data showing lithium up to 500 ppm, if I remember correctly from the press release, and bromine up to 6,000 ppm, how do this align with the recent data from Anson Resources?
It's very similar. I mean, I think the 500 ppm might be an outlier. I mean, let's hope that we drill and we get higher values even than them. But I'm comfortable with what they've got because they've done such a good job, 150 ppm in the Paradox Basin with very little contaminants is shown itself that, it's a great brine for direct lithium extraction. So I'm convinced, given there's again with the meat and the sandwich with them to the north and the south, given the historic logs we have from oil and gas and 23 wells around us or across our land, we know what we're going to get. So I'm very very comfortable with that. But obviously, you're not going to fully you're not going to be able to put a resource together until we drill our own hole and bring everything current. And so, as you know, our goal here is to get drilling. The nice thing about potash and also lithium brines is you're not in a hard rock where you have to do a load of infill drilling, a load of technical work across it, because these are blanket style formations. Where if we go in and we drill with a 3, maybe even a 2, but certainly a 3-hole program, we'll be able to convert a large chunk of those exploration targets to resource, and you can take that straight to PFS. There's no need to do a PEA. You don't need a bunch more infill drilling. You have all the technical data. You know what you've got. We now know, thanks to Lithium and Intrepid, how we're going to produce. So, it may, on a fast timeline, I truly believe we can get drilling, get maiden resources on all of our minerals, and get to PFS within 12 months, if everything goes according to plan, obviously. So that's a lot faster than a lot of mining projects globally.
Yeah, definitely. Simon, okay, with the potash target from 0.6 to 1 billion tons and the Paradox Basin potential of 56 billion tons of lithium brines, how can government policies potash is a critical mineral, it's on the list, it's included. How can the government accelerate the development? How can you accelerate development and give Green River a market edge, if I may call it?
Yeah, so the benefits of being a critical mineral are, hopefully we'll see expedited permitting. I mean, we have seen this U.S. government cherry pick a couple of projects and, really push through the permitting quickly. And I think that'll become more wide scale. They've made it clear they want these projects permitted quickly, especially if it's a critical mineral. So I think that's a huge opportunity here. And then obviously funding. They not only do they have the traditional sources of the DOE, Department of Agriculture and potash. There's a lot of money in the Department of Agriculture for potash. We saw Sage Potash to the south of us, another Paradox player that they've explored and developed in an untried and untested part of the Paradox. So, I mean, good luck to them on that. But they've been very successful in getting funding from the DOA to move that project forward towards production. So there's very much a roadmap there. I mean, we know what that program is. We know what we have to do. And I think as we drill these holes and develop, we'll really be in the position where we can go for government funding on that front, and then DOE for lithium, DFC, which has traditionally been their overseas investment arm, is now active as well domestically. There's talk of a $4 billion fund for development, and now you're seeing the government take equity risk. So the problem for me in critical minerals has always been there's money to build things once you've proved it, but how do you fund the explorers and developers, especially when junior markets have been tough? Now, obviously that's turned, so that's a help. But I think the government is showing its willingness to actually support development as well as you before you move into production, and I think that's a huge step. So being a critical mineral will open all that up, and should also help on the trade front as well. So I'm excited. I think we're really well positioned.
Yeah, Simon, your licenses, I mean, potash licenses and lithium claims are all in good standing. You recently renewed them, right?
Correct. Yeah. So the main BLM federal licenses get renewed at the beginning of September in every year. So, for us, because we've got potash license and claims, we effectively pay double. So it's not cheap, and we have a big parcel of land. So, but we've paid them all up, and then the state licenses come later. We used the funds of our last financing to make sure we'd paid those early and paid them up front. So we're fully licensed for another year. As you know, we have permits in hand to drill up to 7 holes across the state and federal lands. So, we're ready to go. And these exploration targets and the updating of the technical report now really help us hone in on where we're going to drill and show the overall scale of all three minerals. And bromine is interesting in its own right. And, we need to do more work on that. But Gen Anson showcased the large scale, and we've seen on our land. I think in our exploration target on bromine, our grades may be even higher. But bromine is an important industrial gas in agriculture and water purification, in oil and gas in a number of areas. And I think there's only one producer of it, being Albemarle in the US. So it's a really interesting opportunity in its own right. So, we'll do more work on that and explore that.
So bromine could also be a critical mineral, just like you said. So there is only one producer. How is the supply and demand picture looking for bromine?
I think in bromine it's okay. The cost per ton is about $3,600. So, when you have a big resource like we do, I think the contained bromine is 3.3 to about 9 million tons on the high side. So obviously that's big potential. I think having other supplies of it will be really helpful. It's not yet on the critical minerals list, but it is a very interesting mineral, and obviously some really interesting applications. And so I think there's going to be, I think that's really going to help the economics of certainly on the lithium side.
Yeah. Final question, milestones and the news flow from the company. What milestones you plan to achieve going forward, and what can we expect in the terms of news flow?
Yeah, so really, Lucy, in our next sort of few weeks here, we're obviously updating the historic technical report from Agapito. They're updating it for the lithium and the bromine, and also bringing current the potash, and so that'll come out in the next couple of weeks here, and that will be great to have because the old report is 10 years plus old. So this will bring it all current. It'll really, as I say, help with our planning. They're also doing a little bit of a update on the seismic side. One of the beauties of this project is it's pretty flat lying, which you need obviously for solution mining. And so there's some key pieces coming through there. So we'll finish that process, and then really we're going to be focused on, on drilling, getting ready to drill, getting everything bonded that needs to be bonded, and finalizing, which drilling company we're going to use, exactly how we're going to drive it forward, and then getting the drills turning will be big. And as I say, pretty quickly, as we get drill results, we'll be able to move to an MRE. Again, lots of drill control historically, and Agapito has been first rate. So, I think that's a process we can do relatively quickly. And then, as I said, after that, moving the project to PFS as quickly as we can.
That sounds very good. That was Simon Clarke, CEO of American Critical Minerals. Simon, as always, thank you very much for coming, and I wish you luck.
It's always good to be with you.